Welcome to HYCM Insight with myself, Giles Coughlin, the Chief Currency Analyst at HYCM. The market mood for the session ahead is as follows. Oil was able to stage quite a recovery yesterday, putting in a bullish outside bar on the daily chart from key support. What was the reason for this? Well, it was all about the coming OPEC Plus production cuts, which are scheduled to be withdrawn at the start of 2021. However, the Russian energy minister met with domestic oil companies and they discussed the potential for rolling over current production cuts for an additional 3 months until the end of the first quarter 2021. This is supportive for oil. This means that pullbacks in oil should find buyers today ahead of the US election. However, do remember that a Biden victory is expected to be a negative for US oil and could put some pressure on prices in the near term. Trade risks. The main risk to this trade is any negative news from OPEC Plus that scheduled production cuts will be lifted at the start of 2021.